This is our Forex blog for September 10th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. That's part one of our three-step easy Forex system, which is identify which currency is most likely to trend. You can use our sortable currency meter and always watch the strong ones on the top and the weak ones on the bottom. And so step one, obviously the CAD, very strong today. Both real-time, 15-minute trend, hourly, and the daily, weekly, monthly trend was all up by around 12:30 and was extremely strong around 4:30. You want to buy that one versus the weaker ones, which is the New Zealand, which unfortunately has a daily, weekly trend that's up initially, or the Australian, which, let's scroll this back, you can see all the time frames are down. This is not generally a currency I have running, but the Australian CAD is very likely to fall and continue to trend down, and that's really the key. You want small losses, big wins, and it's a lot easier to trade when you have currencies that all the time frame trends are lined up. Once you have a confirmed downtrend, here's some of the high probability entries. Right there, it tried to go up twice. I would have shorted right here. It failed to go over this high right here. So you have this short right here. And initially those trades don't pan out. Comes back up and retests this area of the breakout, which frequently happens. Can't get above it. Great place to go short. And you know ahead of time where your likely profit target is. The first or second fib target comes right to that level. You would have shorted this maybe around 29 and out at 07. And then once it made a lower low, typically it's going to make a two-wave pullback, so you can go short here and here. And if you draw your fibs on that first wave, it gives you an idea of where your the second entry is. You can see right here, it pulled back a little bit. You would draw your fibs off that next wave to get an idea of where the entry is, somewhere between the first and second fib. Goes down right here, and you can see it continued down. There's a lot of different ways of trading using our tools. Another one is using the daily and weekly point of controls to identify which currencies to buy and sell. And if you don't want to use a currency meter, this next method might be a little easier. Here's a quote sheet with a list of symbols. You right click on it and you hit add delete columns. And one of our new tools in the last month is daily value area day and week. And this shows you how many pips above or below the previous days and previous weeks point of control each currency is. So if you sort this, you can see the pound is above the previous day's point of control and the previous weeks, the New Zealand dollar as well. These make two currencies to focus on buying. So we'll start with the pound dollar. This one started off above the
Euro-dollar, double stat low.
Sorry, that's just one of our signals generating. This is the point of control right here. When it finds support here and starts to go up, you can get in a long position right here. You might have got into a trade right here that failed. When it goes back above the previous day's value area high, that's a decent trade. And then the lower containment band is a very high probability trade because you can see the weekly trend for the most part, most of the day was up. The monthly trend's up. It's above the previous day's point of control and the previous week's point of control. Let's zoom out a little bit. You can see the previous day's point of control is all the way down here at the low, and it's a very high probability support area. The lower bands are excellent places to get long when you see initially a little bit of weakness, and then as it hits those lower bands, look, there's no weakness. Very high probability trade, and it ended up going up about 60 pips. If you didn't take this trade right here, when it came up to this resistance area and wasn't able to come back down, you can see incredible strength right there. Look at the tiny, tiny, minuscule amount of weakness on that pullback bar. When it goes back above here, you go long here at 95, and you draw your fibs to get an idea where your profit target is. Usually, probably 80% of the time, it doesn't get above the 1.618. So once it's somewhere in between there, and it kind of runs out of steam, you'd be out of your trade. So that trade probably generated 15, 20 pips. So that's the pound dollar. The other currency that's above both of them is the New Zealand dollar. This one really shot up on Friday. Sunday, it's kind of going sideways right here. It's above the previous day's point of control and the upper value area. You got a multi-hour rectangle pattern, which is usually a pretty high probability trade. The upper containment bands tend to be a good place to get out of the trade with profit. It's not the biggest profit in the world. And then you got a decent pullback. And you always want to draw your fibs on the smallest low, highest high. Here's a 38% retracement. I would tend to want to see it hit that level before getting in myself, but it was within 4 or 5 pips of it here, so if you had gone long, you might have eked out a few pips. This one right here is much better. You'd be long right here at 97 with your stop underneath the low here. And because this area acted as support and now it's being penetrated, the next area you might want to look for entries is somewhere between 77 and 64. Now, as far as the weak currencies go, you can see the dollar Swiss is underneath both the previous days and previous week's value area. So this is one that you want to focus on selling. Notice there's really only 4 currencies you'd be even focusing on with this method. These 2 for buys, the dollar CAD and dollar Swiss for sells. So we'll start with the dollar Swiss. Dollar Swiss is underneath the previous day's point of control, which is all the way up here. Here's the previous week's point of control, and Friday's value area lows right here, which is very likely to be a major resistance area. So when it came up and hit the first fib or containment band, not a bad place to go short, and only pulled back about 10 pips. Came back up there again, and typically I will visualize where the trend line underneath the lows are, and when it breaks that, you get short. You can see this one pulled back about 20 pips. Initially it was relatively strong, but the daily, weekly, monthly trend's all down. This move up right here on a little bit less strength than before, not a bad place to sell, but it is above the hourly, so until it breaks that, you really got to be careful. You have a double bottom right here at the hourly. It's very likely to shoot up after that, but it doesn't. So the next good entry trade really is, when the trend line off the lows gets broken right here, with your stop up here around 60. You always want to draw your fibs, get an idea of where the profit target is. It's not that far away. You can see it went right to it, almost to the exact pip, and that's about it. This move up right here, you would normally sell, especially if it couldn't get above the hourly, but look at how strong it is. It's the strongest strength of the day. So you would probably want to pass on that, but if you did take the trade, you would have lost 6 to 10 pips. Last but not least, the dollar CAD. And by the way, before I forget, we released a new version today that fixed the bug in our tick data. This is another currency that you want to look for sells, and you have a multi-hour, for the most part, sideways range right here. So when it finally breaks out, very high probability. It only pulls down about 20 pips. Kind of makes a little counter trend move up. 4 or 5 bar pullback's pretty decent. You get a sell signal right here when it goes 1 pip underneath that low. And it really didn't pan out, but you probably would have either made or lost 5 pips on that. Comes up to the value area low of Friday. Can't get above it. You have another rectangle pattern right here, and that's your next area to go short. And guess where it goes to? You draw your fibs from the high here to the low, and it goes right to the 1.382 Fibonacci profit target. This last trade right here, short at 75, you're out around 56. You probably made about 16 pips on that trade, but while risking less than 10. The key to trading is small loss, big wins, and some days you're going to have 2 small losses or break even. As soon as this thing starts going your way and then it comes back up, you're up only a few pips at that point. You want to move your stop down to break even. It's either going to go sideways here and stop you out, or it's going to continue down. And you might also want to draw your fib, a little tinier fib on this little wave right here. If it stalls at the first or second fib target, you want to get out. And rarely ever, less than 10% of the time, do markets go beyond the 2.0 fib level. So when it was underneath that lower band, right at both the 1.382 of that bigger swing and the 2.0 of the smaller swing, great place to get out of the entire trade. So those are the 2 easiest methods of trade. Use a currency meter and just simply buy and sell the strongest to weakest pairs, or use the quote sheet or hot list, put the daily and weekly value areas on there, and see which currencies are above both of them or below both of them. They're very strong or very weak. And you also, if you want, you can sort on the weekly value area on Monday and Tuesday and even Wednesday sometimes, and look to buy these currencies if they hit the lower containment bands, because the longer term trend is up, it's above the previous week's value area. You would basically be looking to buy the euro dollar, the New Zealand dollar. You already saw this one. What else do we have? The euro yen, if they hit the lower band. None of these really hit the lower band. Let's see if any of the other ones did. Australian dollar might have. Okay, so you can see this one is above 96 pips above the previous week's value area, and it came down and didn't really quite hit the lower band. But if it did, the lower containment bands are pretty good places to get into the trade. Let's see if the Australian yen did, and it didn't either. Pretty dead day. It did hit it on Sunday though, and you can see you got a little bit of a bounce off of the lower band. And when the currency is above the previous value, previous week's point of control, and especially the upper value area, which is the dark green ones, it's very likely to find some good trades there.